Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Welcome to this week's episode of Investor Intelligence, your weekly podcast on all things investment, hosted by me, Jacob Kearns. As many of you know, we always advocate for a slow and steady approach to building wealth. That's why I've previously spoken a lot about Australian property and will continue to do so because it's been proven over time to be a safe and reliable way to grow your asset base. Moving forward, we want to start covering other areas that a lot of you guys are interested in. And today's episode is going to be on cryptocurrencies as well as other digital assets that are enabled by the blockchain. If you don't know much about them, don't worry because we're going to explain what they are, why you should care, or whether or not you even should care. A lot of the time when people hear the words cryptocurrency or NFTs, they automatically think of them as investments. And while people have made and lost a lot of money investing in this new type of asset class, blockchain technology is far more than just an investment. In this episode, we're going to discuss what this technology actually is, what it can be used for, and how it could impact various industries such as finance, art, gaming, and more. And sure, we'll also discuss whether or not they have a place in your investment strategy. Our aim for Investor Intelligence is to help our listeners make informed investment decisions, and the way that we do that is by understanding what it is we're actually investing in. So joining me today is a man who is going to help us do that. He's built an enormous following writing about these digital assets and is a founder of Zeneca, education-based business teaching people how to navigate the exciting yet often confusing world of Web3. Welcome to the podcast, Zeneca.
Thanks for having me. Yeah, glad to be here. And lots to talk about, and I'm sure we'll get into it.
Well, firstly, the term Web3, and I use inverted commas here because I don't feel like we have a proper name for it yet, right? But the term Web3 means a lot of different things to a lot of different people. How would you describe Web3 and how does it differ to the Web2 that we use today?
Yeah, you're right. There's no sort of standardized definition of it. So I'm glad you prefaced it with that. I'm always reluctant to say Web3 means X because to different people means different things. But the most common explanation is looking at, it's three, Web3, what is Web 1 and Web 2? Web 1 is just the basic version of the internet that evolved, in the 60s, 70s, 80s, 90s. Most people in those days consumed content on the internet by reading it. You would just go to a website and consume content. Web 2 is like the social media age, went from just reading to also writing. So now people were able to contribute to the internet. And that's where we had the rise of blogs and Facebook and Twitter and social media, and we're very much still living in that era. Web 3 adds this ownership layer. So it's like Web 1 is read, Web 2 is read and write, Web 3 is read, write, and own, where now all of a sudden, because of blockchains, the ability to own, whether it's digital assets like currencies or other things, or just have more control over your data and ownership versus these giant Web 2 corporations, it's really giving the ownership back into the hands of individuals. Yeah, that's it at a very high level. Read, write, and own. It's this new ownership layer of the internet.
Okay. And why is that important to the end user?
It really is about giving power back to individuals, I think, is the strongest reason for that. Decentralization is one of the most important parts of blockchains and cryptocurrencies. And, most people will admit we've been moving more and more into a centralized world where a lot of the power in the world has been pooling in the hands of either certain governments, the US government, X, Y, and Z, China, Russia, big governments have a lot of power, or private companies, Google, Facebook or Meta, X, etc. They control so much of the world these days, which is not a good thing. We've seen, time and time again through history what happens when people get a lot of power. Absolute power corrupts absolutely. It's not a good thing, I think, for humanity to have all this power go into the hand of a tiny, tiny amount of people. So by decentralizing that and creating a way for individuals to get ownership back and full custody and ownership over whether it's financial assets or data or something else, privacy, that's why it's important.
Okay. And to understand these concepts and decentralization versus centralization in the context of Web 2. I mean, people use social media, right? Facebook, and they're the centralized entities that are Web 2, I guess. And so as this technology plays out, how does what people know as Web 2 evolve into Web 3? Like, what's the difference there?
Yeah, we're still sort of seeing it play out. People are building new applications on top of blockchains, and we're in the very early days. But one example I like to give is if you're on any social media platform and you have a bunch of followers on Facebook or Twitter or wherever, and you go to a different platform, you have to basically start all over again. It's a completely brand new place. You can't take your followers, or you don't really have that ability to take what you've built over to somewhere else. In a decentralized world, the theory is that anyone can just move from one platform to another seamlessly. There's like this interoperability, and there's this way for, again, the end user to have benefits. That's one of the ways I see it play out. Another is, I mean, we can get into the currency side of things a bit later, but
yeah, I think that stems into the next question anyway, which I have for you. The decentralized and Web3, all these words are a bit confused. Like, how do cryptocurrencies, NFTs play into this?
Yeah, so cryptocurrencies are basically the first use case of blockchain technology, public blockchain technology. And Bitcoin has been around since 2009, in 2009 in one form or another. And it is the one that makes the most sense, I think, to people. It is giving people a way to have a digital currency that, again, is purely decentralized. We've had the ability to buy and sell things online, obviously, for a very long time. Banks don't have giant piles of bills and coins that represent our money. They have a private ledger, their own database, where they say this account has this much money in it. And if you send money to someone else's account in the other side of the world, in a different bank, your bank will talk to their bank and say, hey, we're going to send this much money, so add this much to this person's account, and we'll get this much from this person's account. And there's this world where this system exists. Cryptocurrencies basically eliminates the banks from that system and eliminates the middle intermediaries, which has several benefits, one of which is lower fees and the ability to send money much more quickly, seamlessly across borders at a lower cost, which is actually a very significant use case. The other is not having to rely on central banks and authorities. And this is of varying degrees of importance depending on where you live in the world. In Australia or in America, it's not that, I mean, it is important still, but compare it to Russia or Argentina or a country where you have less faith in your currency, or the government might actually start freezing bank accounts and seizing assets and things like that. If you don't trust your government, having full ownership over your assets and your money is a really, really, really important thing. And so that's where cryptocurrencies were born from. It's the Bitcoin white paper was released, I think November 2008, and it starts with a peer-to-peer, I can't remember the exact wording, but purely peer-to-peer financial system.
Yeah, and I think that decentralized money is important. It depends who you ask, depending on how important they, think it is. But I think it's important to note that even the banks are starting to use this technology too, right? It's not just a world where we don't need to trust banks or governments. It's a technology that, as you said, takes out the middleman and lowers costs, which is useful for a lot of businesses, banks included.
Yeah, blockchains can be used by centralized entities. They can be used in a decentralized manner. They can be incorporated into existing systems. Visa is already onboarding with blockchain technology. There's tons of massive companies that are using it on the back end because it's just more efficient. It's quicker, it's faster, it's more efficient in many, many, many ways. There's this perception that it isn't. And I mean, if you go back 5-10 years, that is an accurate way to say. And in some instances, it is not more efficient today. But the technology has improved a lot over the last 10 years. And, one of the biggest complaints was, you can only do so many transactions a second, or it's expensive. And, people have figured out ways to use blockchains and have, millions of transactions done every single second, which is enough you need for any sort of worldwide payment system.
Okay. That definitely makes sense with the money side of things. But what about NFTs and other non-money sort of cryptocurrencies? I guess Ethereum might be a decent example of that.
Yeah. So Bitcoin is the first cryptocurrency, and it is largely considered a store of value, digital gold, a currency. People might use it to buy and sell things, but it's more of a store of value. Ether, which is the native currency of the Ethereum network, came along a few years after Bitcoin. And it was created to be more than just a store of value. It is a currency and it can be used as a currency, but it can also be used to create smart contracts effectively, or the Ethereum network can create smart contracts, which you can kind of think of as like decentralized applications. I mean, it's kind of a misnomer, the word contract. It's not necessarily a contract, but it's the way to create applications that live on this like global network of decentralized computers that can kind of do anything, ranging from financial things. Decentralized finance is a whole topic we can get into, but you mentioned sort of art, and I think you mentioned art and like non-fungible tokens, which is really this whole other area that has been around for about 5-6 years now, but really, since 2021 everyone's probably heard of it in mainstream media. It was on The Simpsons last week. People make fun of it all the time. The digital monkeys and all that kind of perception is, that's what NFTs are in a sense. But I think breaking it down into the word fungible is probably the easiest way to explain it. Fungible basically just means the same. And so you have things like Bitcoin, which are fungible tokens. You have a Bitcoin, I have a Bitcoin. We send each other the Bitcoin. We're exactly the same. It's like the same as dollars and any sort of currency is generally fungible. Non-fungible is not the same. So unique. So if you have I always use the example, you have a dog and I have a dog and we swap dogs. Now all of a sudden, we're both really sad because we don't have our dog. And it's a big difference than swapping, a $100 bill or something like that. And so NFTs takes that concept of, all right, we have digital currencies. What if we want other digital assets, or a way to prove ownership of digital assets, such as art or gaming assets? The gaming industry is absolutely enormous in the world, and many, many, many more. And that's where NFTs come into the
Yeah, definitely. There's so many things you just touched on that I want to unpack, but you're right. Gaming is such a big application, and why this is all important. There's been a lot of terms thrown out that are even confusing to me sometimes, but this stuff is important because as we move into a more digital age, we need a secure way to transact and to authenticate things. And we're going to touch on why this is important and how it affects industries such as AI and things like that. But you're right. The image that people have of NFTs at the moment is those ridiculously expensive monkey pictures, and that's just not what the technology is, right? Like let's dive into that. Yeah, it's so much more. Let's dive into that a little bit more. And I think art, as you said, is the easiest example to discuss because it's simple, it's easy to understand, and the importance of how this technology can be applied to something like art, I don't think can be denied, right? Because it's important for artists, it's important for art collectors, even if you don't agree or don't like the digital art aspect and think that, art should be made by hand or by a human, which I totally understand and agree it's not for everyone, but I still don't think you can deny that it still has an application, and some people, it suits them better or they like it. Like it's an entirely different thing. So with that, Zeneca, let's talk about art. Why is NFTs an important part for digital art in particular?
It's important because without the technology, there has never been a way for a collector to own a piece of digital art from a digital artist, because you could just, right-click, save the thing and save the asset or whatever. NFTs allows a way for the artist to effectively say, I'm minting this piece, I'm creating this piece at this point in time on the blockchain. There's digital, there's public provenance. Everyone in the world can see that I've created it at this point in time. I'm selling it to this person. This person now owns it in their online wallet. And so it's going from me to them. You can track it and trade it and say, okay, this person paid this much for it. They hold the asset. They can now do what they want with it, et cetera, et cetera. And the reason this is big, especially for digital art, is because I like to use the example of if you're an animator and you've been creating digital animations for years, decades perhaps, you couldn't really sell your digital animations. You couldn't sell your art. It was you'd work for a Disney, you'd work for an animation studio, you'd like be contracted and you'd help them create an animated show or some an ad or you do your art for fun and for pleasure and create it. But now you have a way to actually sell it to a collector, and a collector can buy it and support you. And, everyone always says, well, what's the value in that? Why would you pay for it? You could just, if you think about, take a step back, why do people buy art in the first place? It's to support artists. It's to celebrate the arts. Anyone can go to a museum and see tons and tons of art. Anyone can go online now. You can see all the Picassos in the world. You can see all the money from on your computer screen, that doesn't mean they're not valuable. They're valuable somewhere because someone paid for it and they own it and they have certain rights and displaying and all that kind of stuff. It's the same with the digital art. It's just it's difficult for people to wrap their heads around because we've lived for many decades in a world where you just didn't own anything truly in a digital sense. You just copy, paste, and things like that. But having this ability to provably show who owns it, to track it, is really, really, really important. And taking it another step further, it actually does tie back into the physical art world because, fraud and fakes in the art world is a big problem, and it's sort of been a problem for a very long time, and it's arguably has been getting worse for a while as technology it's been like an arms race. The technology got better for people to create fakes, but then the technology got better for people to detect them. But now with blockchain technology, people are working on, and there's actually products where you can sort of embed basically like a physical QR code or NFC code or something in the artwork itself that when scanned like connects to the blockchain. And so like at the time of the physical creation, there's also a digital creation made, and the two sort of go hand in hand, and you can't have one without the other. And that way you can say, okay, if this physical doesn't also have this connection to the blockchain, it's a fake. And we can prove it because blockchains are public and transparent and anyone can see. So yeah, it's really been revolutionizing the art world. Not everyone loves it. There's a lot of artists who don't like it, a lot of art collectors that don't like it, but there are lots that do. And there's lots of new art collectors coming into the fray. And a lot of the big, auction houses, Sotheby's and Christie's have come on board. A lot of the biggest museums in the world have come on board. MoMA, LACMA in LA, Centre Pompidou in France, like tons of museums are acquiring NFTs into their collection because they see it as this new era of modern contemporary digital art. And it's a big deal.
I think that is interesting what you're saying with the physical and digital proof of art. In my research, I'm getting a traditional art investor on the podcast. And in doing my research for that, I actually didn't realize how common art fraud was and how difficult it is to actually trace. I read that a lot of the auction houses have a disclaimer that even though they do a really thorough job at trying to determine what's real and what's not, there's still a risk that what you're buying is fake. So a lot of money goes into that, and you really don't know for sure a lot of the time whether it's real or fake. Going back to the smart contracts and artists putting out work, provenance, what we just described, where you can trace back a piece of artwork to who's owned it, but also to the original artist, which is super important. In terms of art in particular, for this example, is it just the provenance factor that is the biggest selling point for digital art?
It's certainly one of the biggest selling points, provenance, but also the fact that, again, you really literally couldn't sell certain types of digital art before. Generative art is another area that we haven't touched on yet, and it's basically where an artist writes code, and then the code then creates artwork and outputs. And this has existed as a medium for a few decades, but it has really come into its own via blockchain technology in the way that people are using the blockchain in the artistic process. So the outputs could not be created without a blockchain. And so it's this new medium of art, effectively, on-chain generative art, that is just new and not possible, and artists are having a lot of fun exploring it. So that's great. And then another part of why I think NFTs, especially art NFTs, are fantastic, both for artists and collectors, is that it's really kind of democratizing the art world. Like for most people, I would suspect, including myself up until a few years ago, I never really thought of myself as an art collector. I definitely didn't think of myself as an art collector. In terms of an art appreciator, I was like, I like art. I'll visit some museums if I'm traveling. And, I really did enjoy, going, spending a few hours, you get the guided tour and look at some art. And that was kind of it. But I would certainly feel intimidated going into like an artist gallery and like, having some snooty people staring at me and trying to I wouldn't know the first thing about the art history or anything like that. And it's a very intimidating experience going into a gallery, especially one that is selling art, especially high-end art, but any sort of art. And the blockchain and NFTs allow basically anyone from their home, so you can be sitting in your pajamas and like go into these digital galleries and be like, I like this artist. I love their work. I love their story. I want to buy some of their work and support them. And then I'll have it in my wallet and I can do what I want with it. It really does democratize that. And it for collectors, it's amazing. And for artists as well, it opens up a global market in a way that is just an additional layer above the internet. You don't have to worry about shipping costs to countries all around the world. One of my favorite artists, he's based out of Thailand. He actually doesn't even speak English, but we got to talking through Google Translate and stuff, and I've clicked at his work, and he's done a lot of stuff for Zeneca. His name is Pondering, and it really does just like open up a lot of opportunities for artists and make things nicer for collectors as well. And really, it's creating a new generation of art collectors and appreciators, because I had never spent much money on art, or any money really, up until a couple of years ago. And admittedly, when I was getting into crypto and NFTs, finance was my primary goal and reason. I was like using it as an investment, trying to make money, and I thought I could make money. But over time, I grew to love art and artists and talking with them, and it adds soul into life. That's, if you think about why art even exists in our world today, it's not to, certainly not primarily to make money. Artists don't go into art to make money. Ask any artist, they'll tell you, basically any artist, the majority of them aren't making a lot of money. They do it because they love it or they can't not do it. And anyway, there's a lot of benefits to it, I think, and I'm clearly passionate about it.
No, I love your passion. And I think that is one of the biggest critiques of NFTs as well, as the financialization aspect. There's pros and cons to it, but I do see that as one of the biggest critiques to art in particular. I mean, but it exists in the traditional world as well.
Exactly. It's financialization of art has been a thing for a very, very long time. And art has sold for crazy amounts of money, hundreds of millions. And there's an inherent tension there between art and financialization of it. It's not new to blockchain technology. It certainly was taken to extreme levels because of the wild speculation that is rampant in the crypto space in general, and it's the Wild West nature of it. With any new technology, it's kind of the Wild West. But yeah, it's overall, it's not a good or a bad thing. I think it's just a thing that exists in the world when you think of art and people buying and selling art.
And I've spoken to a lot of digital art collectors and what sort of drew them into digital art. And a lot of them, like yourself, weren't initially art collectors, but were drawn to it because it's a different form of art. What we touched on before, it's using code in an aesthetic way rather than a practical way, which it's traditionally always been used for, which is something different. Like, you can appreciate code, and it's a different type of art where a traditional artist is using their hands or whatever it is to paint something, whereas coder, mathematician, or whatever it is, they're writing code to put in all these outputs that make up art. And going back to what you touched on before as well, art is defined by different eras, right? And if we're talking about the value or the financialization of assets, or why it might be important or what might bring this era of digital art, is because it's a new form. And traditionally, if you look back at the older forms, they are defined by, I'm not an art person, so it's like contemporary art and all the different eras that are defined by significant events. And what I'm trying to say is this is a new significant event that is a different type of art.
Exactly, yeah. And I mean, I'm not an art expert either, but I've done a lot more reading and research over the last couple of years. And if you look back at a lot of the largest art movements over time, I mean, they were hated by the art community and the general public and laughed at. And it's not always, oh yeah, we're going to make a new kind of art. Yeah, that makes sense. Let's do it. Now it's a big thing. It was a new technology comes along, or a new school of thinking of how to, create art imagery and do things in a way that had not been done before comes along. And again, usually there's a period of ridicule and then understanding and acceptance. And I think that is kind of what's playing out with NFTs and digital art these days, where clearly there's a lot of ridicule and skepticism and things like that about it, but it's undeniable that there is a monumental, significant worldwide movement when it comes to all of this. Probably one of the most famous artists in the world today, forget NFTs, is Rafiq Anadol. He creates magnificent animated scenes utilizing artificial intelligence, and takes tons and tons of data from the real world, from the internet, from the wind, and so many different data points, and feeds it into these massive algorithms and computers and creates art out of it. And he's had a massive display at MoMA for months now. Tens of millions of people have seen it. He's going to be displayed at the Las Vegas, that giant sphere. His art is there. And so and he has a ton of NFTs, and he really believes in the technology as well. And so at the top end, you have museums and top artists buying it. Another top artist, Damien Hirst, released an NFT collection, and actually a few, and experimented with the medium. And so it is getting acceptance, and it's just undeniable. It's a thing, and I have tons of conviction in it. I don't think it's going anywhere. Some people will hate it, some people will love it. But again, I think we'll look back in 20 years and be like, oh yeah, the digital art movement started in late 2010s and early 2020s.
Yeah, you're right. I think it is becoming more accepted. But I want to play devil's advocate for a little bit here. And I know you touched on why this isn't the case before, but originally a lot of people, their critique around NFTs was, I can just screenshot it. It's not yours. I own it now. Like, what can you say on that?
I mean, they're not wrong in the sense that you can view it or look at the art by right-click saving it, but you don't own it. You don't have the asset in a wallet in your blockchain. And if that's important to you, which for some art collectors, it is important to own the art, then that's what matters. And that's where the value will accrue. If it's not important, then for most people, it's not important to actually own the art. You can appreciate art without owning it. You can look at it anywhere and it doesn't matter. You can right click save and go to your heart's content. It does open up other opportunities because the way the blockchain works is if an artist says, this person owns my work, or let's say these 10 people, they've bought from me, I can see it, it's in their wallet, there's the public ledger paper trail where they send money to me, I sent them the art. Clearly, these are the people that own, and maybe they sold it to someone else and now this other person owns it. They can say, all right, I'm creating a new collection and I want it to be just for my existing collectors. And so they can very easily say, all right, I know exactly which people or which online wallets and accounts own my work, and I can engage with them and have this direct relationship, a connection with them and support them and reward them. You can have special events and you can just engage with your collectors in a way where you just clearly know who has supported you. And this sort of like leads into the utility element of NFTs, which gets beyond just pure art, where you can say it almost acts as like a digital membership or country club or rewards program or loyalty systems. And there's a lot more that you can do when you can right-click save something, but the blockchain won't say that you own it. And so this individual company might not won't decide to reward you for right-click saving.
Yeah. Okay. And it forms another layer of community around it, right? Like that you couldn't normally get with traditional art alone. And moving away, actually, before we move away, is there anything else you think is important about art?
I think that one of the things kind of holding digital art back, or has been a little bit, is sort of the ability to display it easily and meaningfully in sort of quote unquote the real world. I mean, art is meant to be seen largely and appreciated. And a lot of the screens we've had haven't really caught up or been really fantastic mediums for viewing the art. They've either been expensive or clunky to use, or the software's been bad. It's getting a lot better now. And I think that as that continues to improve, and we all know where the world is heading. We're leading into a more and more digitized future. We're going to have probably more screens in our house, or we'll be wearing glasses and just this AR and VR, that our world is going to be more digital. The ability to see and display and engage with your artwork in the digital realm, I think, will become increasingly more wanted as time goes on. Imagine there's a piece of art that you absolutely love, and fast forward 5-10 years from now, we all have the Apple Vision Pros, and they've become standard, and people use them in their work situations and stuff. And in your little work office that's in your headset, basically, you'd love to see some piece of art, but you can't right-click save it because that's not how it works in this world. You have to actually own it to see it. And then, maybe there's going to be tons and tons of free stuff as well, but for this particular art, from this particular person, you need to own it. And that's where the blockchain comes into play.
And it's interesting looking at the amount of time that we are spending online as a society. You said it's just been increasing.
Oh, it's scary.
It's scary. And for a lot of people, I think even despite all this, it still might not make sense, or they still might not see the value prop. But I think it's not entirely for us, right? Or for the older generation. So it's the kids these days that are spending the inordinate amount of time online. And for them, this is just going to become the natural world. And you're exactly right. It's Fortnite and Minecraft and Roblox and Counter-Strike and Grand Theft Auto and these digital games and virtual worlds. Ask any parent, basically, almost any parent of any kid. They love these digital worlds in one way or another. And they're already spending money in them. They're buying digital assets, basically buying digital art. They call them skins, and it's a different, clothing for your gaming character. And it's that's basically what NFTs are. It's a way to do it that doesn't rely on centralized entities and again, brings it back to this decentralized world, which is powerful. I wouldn't say it's not for older generations. I think it is for everyone. And if you do start appreciating and wrapping your head around it, it's a fascinating world, but it is certainly going to become
more and more prevalent as, teenagers grow older and have their own funds and money and want to spend it. More and more kids will decide to spend $50, on an online game in a digital world than go down to the local toy shop and pick up a toy.
No, you're right. And it's fascinating the amount of money that's being spent on these digital cosmetic skins that have zero effect on the way the game is played. But they're spending, hundreds of thousands of dollars on these skins. Yeah, it's insane. And how does the blockchain come into that in terms of a better user experience for the gamer or for the user?
Yeah. So, when it comes to gaming, the gaming industry is $300 billion a year. It's a massive and growing. It's bigger than music and movies and TV shows and art. Art is like 50, 60 billion. And so clearly a lot of people are spending a lot of money on games and digital worlds, digital assets. One of the problems with how it is now is that when you spend your money, it's just gone. Like you've got it you give it to a company, and in the game, in that world, your character gets some certain assets, but you can't resell. Like let's say you stop playing the game, the money is just gone. Whereas in the physical world, you buy clothes, you buy whatever, art, you buy any assets. You can, in theory, have a garage sale, go on eBay, resell them, give them to a younger sibling and be like, hey, you use this. That doesn't really exist in the digital world because, these centralized companies, they don't want you to be able to take that and resell it. They want the next person to buy it again and buy it again and buy it again. And so NFTs basically give you ownership over the asset where you can then decide what you want to do with it, whether it is resell or not. So I think that's one important part of it. Another is, again, just trying to eliminate all that power from a centralized entity. We've seen instances where, people have had their accounts frozen and locked and their assets effectively taken after they spent a ton of money. And if they're NFTs, nobody can come and take your money. Nobody can come and take your assets. That's the whole point of it. You have full ownership and full custody over it. And then the third point is the interoperability layer of it, which is if you buy an item in one game, you can't take it to another game. It's kind of like you have to go and buy a different item in that game. And I think we're still quite a while away from this. We'll need a lot of industry standards, and it's not just, you can't just easily buy an NFT in one game and be like, I'm going to take it to another game because it's completely different environments and worlds. But zooming out 10 years, I think we'll come up with sort of standardized frameworks for certain types of games, perhaps, where you can take items from one game to another. And there's this massive metaverse where you just have your digital assets and just have more ownership over them. It's kind of like, imagine in the real world, if you couldn't buy it, if you bought clothes, but you could never lend them to a friend, or you could never resell them, or maybe every now and then you break some term and condition and a big company comes and takes your clothes away because they don't agree with what you're doing. It's like it's just a better system when you really think about it.
And I think that's one example of someone who's spending all this money on Fortnite skins. If the company does turn around and say we ban you for whatever reason, it's gone. Like it's not, they don't actually own the assets, so they can't go and sell. So whatever they've spent on it is lost, as you said. But this digital...
Yeah. And that's like the rarer situation. Yeah. The much, much more common one is someone plays the game for a year or 6 months or 2 years and then they're like, oh, I'm bored with it. I'm going to go play another game. And now the $500 that they sunk into the game is just stuck there. And it would be nice if they could get $100 back for it or something, or give it to a friend or something like that, which... without, you give your username and password and all that kind of stuff, but usually that's connected to your overall account. And I think the whole resellability and handing it over to someone else is a really big part of it.
Okay. Anything else on gaming?
I think that gaming and NFTs are going to be absolutely massive. I understand that there is pushback, and I think justifiably so. I'm a massive gamer. I've been playing games my whole life. And I think that a lot of gamers, especially sort of my age, I'm 35, are a little jaded at the financialization of games. It used to be you pay $50, you get a game and great, you enjoy it forever. Now it's subscriptions and monthly additional content and microtransactions. And it seems like these gaming companies are just trying to gouge you. And I can see that people are afraid that with NFTs, because of the financialized nature of crypto, they're going to gouge you even more. But to that, I would say it's like, think of the blockchain as a tool, and some people will use it for good and some people will use it for not good purposes. It is up to us as gamers, as consumers, to support the companies that are doing it in a way that make it less price gougy And there are a lot of people doing that. And I think it can lead to a better future for a lot of people.
Yeah, cool. I mean, we're sort of doing a 180 going back to the start. I mean, finance, that's how this technology all started. How does crypto and DeFi specifically, how does DeFi work? And I guess why is it important for people that don't have access to banks and funds like we do?
So DeFi stands for decentralized finance, which is somewhat self-explanatory, but effectively, centralized finance is what we all know of in the world, where if you want to do anything with your money, generally you interact with a bank, or if you want to get a home loan on a house, you'll interact with a mortgage broker, or et cetera, et cetera. If you want to earn yield or interest on your funds, you sit it in a bank account and that kind of stuff. Decentralized, and that gives all the power to the centralized entities. And usually what's happening is, banks are profitable businesses. They want to make money. So that you'll just never get the full extent of what you could possibly earn from your money because of the bank taking their own profits and having to pay salaries and teams and buildings and stuff. Decentralized finance is this idea where we eliminate the banks, we eliminate the middle intermediaries, and use smart contracts to trustlessly create systems where, like, I could lend you money and, you could pay me an interest rate on it. And, to do that today, if we take the blockchain out of it, we'd have to either trust each other, and I'd have to believe that, oh, you're going to pay me back, or we find some third person to like escrow the money, and just it gets complicated and not feasible and practical. Where it's on chain and with smart contracts and all automated and trustless and transparent, if you trust the code and I trust the code, which, as time goes on, more and more people will understand and trust that, yes, this has been running for years and years. There's no problems. Everyone uses it. It works. All these developers have read the code and trust the code. And, the code is law is one of the sayings in crypto. Then we can borrow and lend money back and forth from each other and earn yield respectively. That's one way that it works. Yeah, it's a more efficient system because the yields are just generally going to be higher because you don't have to, there's no intermediary taking profit. And the smart contracts are generally designed in a way that where it's like a race to zero in terms of the fees involved. It's very, very, very minimal fees these days if you want to borrow or lend money, and very competitive rates in decentralized finance.
Yeah, why do Bitcoin, for example, and these other cryptocurrencies have value?
It's a good question. And to really answer, you have to go back to like the history of money and financial assets in the first place and why they were created. And it was created because, the barter system is inefficient and people wanted a way to just more efficiently buy and sell things. And, people use shells in the really olden days. And, we've used gold and we've used different coins and a lot of different things. And eventually we got to paper money, and then we got to like digitalized versions of that and bank accounts and things like that. And Bitcoin is effectively the latest evolution of money. It is a way for people to buy and sell things digitally online without relying on any centralized entity. So it all comes back to decentralization. And why is there value? Because people ascribe value to it. Why is there value to the US dollar? Because the world says we trust and believe that there's value in the US dollar. Why is there less value in the Russian ruble today? Because the world says, you know what, we don't really value that as much anymore. So it's really like everything in our lives is stories and narratives and what we as humanity believe. And over the last 15 years, it is clear that people have decided to believe in this digital currency, this decentralized, trustless currency to a large extent. Like the total market cap of all cryptocurrencies is like $1.5 trillion now. And because of that, it is an effective store of value and people will use it to buy and sell and trade things. Oh yeah, another thing is, people are losing faith in traditional currencies, whether it's due to inflation or, again, lack of trust in their governments in countries where there's hyperinflation. It's sort of like a flock to something a little more global, and it's definitely turbulent. The price, obviously, of a lot of cryptos goes up and down a lot. But for those of us who, again, are lucky to be in countries where our currencies, Australian dollar is, it varies a decent amount. Like this year, it's weakened against the US quite a lot, but it's not crazy. It's not like 90% drop. There are countries in the world where hyperinflation goes wild, and all of a sudden your money is not worth anything anymore. And giving people an option to like hold an asset or a currency that is easy to access, decentralized, anyone can do, and the government can't come in and change it or take it from you is a really, 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 really powerful concept. And that's why it's valuable. And I think that's why it will always be valuable.
And I think that's why a lot of people love Bitcoin as money. As you said, there's only, I think, 21 million total Bitcoins.
Finite supply. There'll only ever be about 21, just under 21
whereas
million.
if you look at fiat currencies, which is just a fancy word for government-backed currencies, there's infinite potential supply. They can print as much money as they want, which devalues the currency, which is one of the reasons, not the only reason, but one of the reasons why we've seen inflation among supply chain and other things. But to what you're saying, that is a value proposition of Bitcoin as money. But I guess you can say there's critiques about Bitcoin as money too, because how could reasonable money go from whatever it was in peak bull, like 70,000 or whatever it was, back down to half that, less than half of that?
I'd say to that, it's, it is a new thing. Cryptocurrencies are new. And what we're seeing over time is that, people will speculate on it. Like any sort of financial instrument, people will speculate that the value of it will go up and it's underpriced right now, or it's overpriced, and they'll bet on it going down. As time goes on, what we're seeing is it is evening out. So like as a percentage, go back 10 years and you'd see it go up 100x and then down 99%. And then maybe the next, few years later go up 20x, but then it'll go down 80%. And, as time goes on, we're getting to the point now where the biggest drops are getting lower and it is getting more and more stable. And we're still a long way from like just holding a certain value. And I don't know that we'll ever get to a point where it's just like, all right, one Bitcoin is worth this and that's like it forever. It will always fluctuate, but that's what all currencies do. It'll fluctuate against other things. What buying power does it have? A bar of gold fluctuates, a US dollar fluctuates, every asset fluctuates in value compared to other things. As time goes on and as the market matures, it will even out. But because it does fluctuate so much, you have to be careful with it. It is very risky. You don't want to, put a bunch of money in it that you can't afford to lose. You need to. I always advise people to be sensible. Like you might love Bitcoin, believe it. I do. I'm a massive believer. Don't sell your house and put everything in Bitcoin. You put a small percentage of your overall portfolio in crypto. As a lot of people use it as a hedge against inflation or traditional markets and things like that. Others who believe more in it just think it's a really good investment for other reasons. But either way, be smart and sensible about it.
Okay. Yeah, let's talk about the investing side of things. Besides be sensible and only allocate what you can lose, what other advice do you have around investing in crypto, NFTs, this whole world?
Yeah, I'm a believer that the vast majority of people are unprofitable traders. I don't think most people will make money day trading the stock market. I don't think most people make money day trading Forex, traditional currencies. I don't think most people will make money day trading cryptocurrency. So the best strategy, in my opinion, is dollar cost average in. Just decide, I would like to allocate 10% of my investment portfolio to cryptocurrency. On the first of every month, I will set a buy order. I'll buy $300 of Bitcoin and $200 of Ether and set it and forget it. And that is your strategy. And I think that is going to be the best strategy for, again, 90+% of people. There's that last 10%, there's people who have a lot more time or knowledge or experience and they want to get deeper into it. And there's a ton of opportunities in the space and you can definitely make more money and find those opportunities, but it comes with increased risk. And so my general advice to basically everyone is dollar cost average in. If you want, you can sort of look at how things are going on a macro sense. And, if things go up a lot, then you can like start to dollar cost average out a little bit. But just, I don't recommend anyone tries and like time the market, try and buy at a good time, a bad time, just DCA.
Yeah, no, I definitely agree. I think that's the best strategy for most people. But I do think there needs to be some level of education or awareness or conviction in what you're actually buying. Like, do you really believe in Bitcoin as a store of value, as money, or whatever you decide that to be? And if you're buying Ethereum, like, do you believe in the technology around smart contracts? Do you believe that this will be used in a whole bunch of various ways with decentralized applications? If not, probably don't invest in it. Obviously everyone has their different strategies and risk tolerance. Going in depth into some of these projects or businesses or whatever you want to call them, if someone was interested by this conversation and wanted to learn more, what strategies or advice would you give someone who has a bit more time and wants to get involved and learn about these projects and find things to, I guess, invest in that aren't Bitcoin and ETH?
My first bit of advice is be patient and don't rush into anything. It's very tempting when you start going down the research rabbit hole. You'll find some YouTuber who's very charismatic and will promise you, oh, you'll make 100x on this thing, and just like put your guard up. There are a lot of charlatans out there, like there are in the traditional world, but and newer industries tend to have a higher percentage of snake oil salespeople because the general level of knowledge out in the public is not up to scratch. So just be careful, be patient, be careful. I always like to give that advice first. Second thing is it's going to take time. Like if you want to be a competent trader or find good investment, undervalued opportunities, which again, I really do think they are out there and there are some fantastic opportunities, you need to take your time. You need to actually do some research. And to your point, what you said before, have conviction in the thing. Buying a thing because someone else, your friend told you to buy it, or you listened to a podcast or you saw a YouTuber and it sounded like a good idea, you're never gonna, like, you might get lucky, but if the price drops, you'll panic and fear and be like, oh, I'm going to sell. I don't want it to go to zero. Whereas if you had conviction in the thing, your mentality might be, oh, it's cheaper now. I'm going to buy more because I really believe in it. And so I really want to double down on that point and say, make sure you have conviction in the things you're buying. And then in terms of how to do the research, one of the problems I think is that there's such a flood and wealth of information and it is constantly coming out. Like there is a fire hose of new things every single day. Like this is my full-time thing. All I do, I get newsletters every day and I can't keep up with 1% of all that's happening in the crypto space. So I would say find like a niche or an area that particularly interests you. If it's the gaming side, look into like gaming and crypto and NFTs and blockchains. If it's the DeFi side, look into like decentralized finance and the institutions and platforms that are sort of operating in that arena and what's happening there. And focus your time in one area to begin with. And I mean, like YouTube is a great, like how I got started, I just started Googling terms and found YouTube channels and started like deciding for myself, oh, this person seems like a reasonable person. Oh, this person's yelling really loudly and telling me to buy something. That seems like an unreasonable person. I'm not going to listen to them. And, use your own radar and your own sense of who's smart and who's not. In terms of conviction, I think Bitcoin and Ethereum are by and large the two most popular and significant currencies and blockchains. I recommend starting there. Read the Bitcoin white paper. It is very easy to read. Google it, Bitcoin white paper. You can read it in half an hour, maybe less. And two books I'll recommend: Mastering Bitcoin and Mastering Ethereum by Andreas Antonopoulos. I think his surname is. They can get a little technical, but like you can skim the tech parts if you want to, but they really give you a good understanding of how these blockchains work and why they're important and powerful. And one more person, actually, there's this great Bitcoiner, his name's Jamison Lopp, Lopp. He has a website and he has tons of resources on there. So like, I really recommend that to people.
Awesome. I'm definitely going to check all those resources out. I guess for me, the biggest thing is digital asset ownership and what that means for gaming and art, as we've discussed. But what are some obstacles that are in the way of us achieving this world?
There's a lot of obstacles in the way. I think, so I wrote an article on mainstream adoption and like how do we onboard the next billion people into the crypto space. And there are three main things that I think are lying in our way. One is the user interfaces are just terrible. Like it is a bad user experience. It is complicated. It is risky. It is confusing. The UI UX is just terrible by and large across the board. Most of crypto has been built by engineers and not designers and people with, user journeys in mind. It's getting a lot better. We just need to improve. Like we're at the late 90s stage where you have MP3s on a device and you copy paste. Anyone who was a nerd in the 90s could use MP3s and figure out how to use music. But it wasn't until Steve Jobs came out with the iPod, 1,000 songs in your pocket. All right, now all of a sudden the tech is abstracted away. Anyone can use it. So we need the infrastructure to get a lot better. The second thing is a mentality shift. I think that, a lot of the world is quite anti-crypto and even more so anti-NFTs. And I think that people are generally afraid of new technology, skeptical of new technology, ignorant of new technology. But also they are right to be all of these things because a lot of the space is like rife with scams and fraudsters and charlatans. And, again, parallels to the early days of the internet, there were a ton of people out there scamming people for money. And, those who were around in the 90s will remember your advice was to never put your credit card information online. And then eventually got to a point where like we just tap a thing in all of our credit. It's all connected now. It's like, it's how far we've come. We just need to improve there. Okay. Infrastructure and the mentality. And the third one is education. You know, like I said, there's a ton of information out there and it's sort of like a fire hose of content and it's confusing. There are great educational resources, the books I recommended, the Jamison Lupp website. There's this YouTube channel called Finematics I recommend. At Zen Academy, we create a bunch of great content. I like to write and educate. We just need more of that. We need more people talking about it, educating others about this complex tech in parallel to the infrastructure improving, and that will sort of lead to the mentality shift as well.
Yeah. Going back to what you said in terms of the user experience and mentality, I think over time that will become moot in a way, because I don't believe that from a consumer level that they're really going to know that they're using or interacting with the blockchain, right? Like all this technology will be on the back end. So the consumer will see the end result, which is faster transactions with cheaper costs and everything else that goes with that. Mm-hmm. But I think it'll get to a point where they don't even realize they're using a crypto wallet, or they don't even realize they're on, or it doesn't matter to them, right, what they're using. But what matters is the actual result that they get from using this technology.
Yeah, you're exactly right. It's getting abstracted away. It already is in a lot of instances. You know, for the most part in the history of crypto, if you wanted to interact on the blockchain, you had to like set up your own wallet, you know, write down a series of words and keep it secret and safe, and, you know, sign just complicated, messy transactions. And now we're at a point where anyone can get an account with an email address. And I think we're very close, if not, we're already at the point where you can use your phone and just use like biometrics to like create a new wallet and be on chain, and just it all gets created for you, and it's just in the back end and abstracted away. And that's definitely going to be a trend that continues. It's definitely getting there.
Two more things I want to touch on. Firstly, AI. How does artificial intelligence play into all of this?
Yeah, I mean, AI is obviously a massive thing in the world today. I think it's going to change our world in unimaginable ways. And my opinion is basically everyone is underestimating it. But I think that one of the biggest things we're already seeing happen with AI is this prevalence of deepfakes or fake content. You know, fake content has been around for a while, but it has gotten to the point where it is so good and so indistinguishable from real content and so easy for anyone to create. Anyone can go into Midjourney or DALL-E and create an image that looks exactly real and is just not. And you can do that with celebrities, with politicians, with other people, and really create, you know, vicious narratives or misinformation campaigns, or just spread, you know, even with good intentions, bad information can spread. And so we need some way to authenticate what is real and what is not. And that is what the blockchain is kind of designed for. It is this public ledger of provenance that anyone can see. Oh, this person created this video at this time. It came from there. It must be real. And like, I really do think that blockchains and AI will merge in, like, AI won't be able to exist without blockchain in a very significant way in the future, especially when it comes to fake content and solving that problem. I think it's an excellent solution to a very, very, very big and serious problem.
It's really interesting. And I think the common example of that a lot of people might have seen was the image of Donald Trump getting arrested. Yeah, it looks exactly. So real. But it's not just images, right? Like it's videos. I've seen videos on YouTube that look so real. If I didn't know the person who was the video that was made from, I would have, like, it would have fooled me. Like, it's so scary.
Yeah. And most people react first and think later and make up their minds immediately. And most people are not even on their guard at this point in time, where they'll see something, they'll believe it, because we haven't yet lived in a world and been conditioned enough to be skeptical of everything we see and say, oh, that's not real. What is it? Really gets philosophical about what is real, but it's going to get quite scary, I think.
Yeah, no, I definitely agree. It's scary to think about the time between now and when we do have that authentication where we can see what's real and what's not. Like you said, if people react first, what's the world going to be like when people are sort of, judging based off stuff that isn't true?
Yeah. One thing on this is, to the credit of a lot of the big companies and governments, they are very actively working on this problem. And I saw that there was some standardized system that came out, I think, by Adobe, who do Photoshop, and like US government and a bunch of other massive, maybe it was like Sony or Canon or one of the camera companies, it might have been Canon actually, where they all came together and said, we need to solve this problem. How can we, there's already all these fake photos out there. We need a way to show what's real and what's not. And they came up with this massive solution to it, this big system, this standard process. And there's a website with all the resources and there's a million pages, and I started reading it. And I control F searched for like the word blockchain. It didn't appear once, which kind of surprised me. the word block and the word chain independently appeared like 100 times each. So that they've basically taken the same concept, but for some reason they've built a blockchain without building a blockchain, which is an interesting approach, but we'll see if that's the one that sticks. But I think that, using this it's the same kind of technology, proving digital ownership in a public way that anyone can see. Hopefully it's done in a decentralized way where it's not controlled by one entity or even a pool of 10 big entities. If it's fully public infrastructure, which is really important, I think, have public ownership over the internet and not private ownership, then it'll be a blockchain solution.
Okay. One more thing to end on, I guess. Do you have any strong opinions on where you see the market moving in the near future, medium-term future, and long-term?
Long-term, I'm, if you haven't been able to tell, extremely passionate, bullish, and I really do believe in crypto long-term. I think it's the genie's out of the bottle. It is never going back, where the adoption is going to increase as time goes on. It's one of those things as well that even the harshest skeptics and critics, I think, when you really talk with them and discuss with them, like, yes, they are right, and to be skeptical about a lot and critical about a lot. And there's a lack of product market fit and solving real problems and a lot of scams and all this kind of stuff. Even they will admit that there is value in a decentralized public blockchain for various reasons. And so, the future is, in my opinion, very bright. I think in terms of short, medium, long-term market sentiment and price action, we're recording this November 9th, 2023, and we're at this point in the market where things are seeming good in that we've been going through kind of bear market for like a couple of years. Bitcoin itself peaked in actually almost 2 years ago, November. It could have been to the day, November 2023 it was. And, it's dropped and then gone back up a bit, but it hasn't sort of hit, it was 69,000 US then. It's about 35,000 US now. But we're at this kind of inflection point where I personally, I absolutely not financial advice and be very responsible with your risk management. But I personally am feeling quite bullish in the short to medium term. I think there are a lot of things going for crypto and Bitcoin for two main reasons. One is if we look back over the last 12 to 24 months, there's been a ton of quote unquote black swan events. FTX, a massive exchange with a lot of user funds went down, big global financial fraud. The founder SBF just got convicted and all that kind of stuff. A bunch of other big black swan events happened. Lots and lots of things crashed. Lots of people lost a lot of money. Crypto survived. The industry survived, doing quite well considering all of that. A lot of people have been building applications and real world use cases. A lot of big companies are coming on board. You have Starbucks, you have basically pick any big company now, they're experimenting and engaging with the blockchain technology. So that's all good, I think, bullish sentiment to me. And then looking forward, we have things like in the US, the Bitcoin ETF is extremely likely to get approved in the next couple of months, which will bring in, you would imagine, quite a lot of capital from people that might otherwise not have had exposure to the space, but want exposure to it. One of the difficulties in the past has been, it's not as straightforward to just buy some crypto or Bitcoin. It's gotten easier over the years with like Robinhood and Coinbase and apps that make it a lot easier for users to buy. But if you want to have if you want to buy a large amount, part of your retirement fund or your overall investment portfolio, it hasn't been a great way for that. Now with ETFs, which are, again, I think 99+% likely to happen in the next couple of months, that will bring in a lot of money. There's something called the Bitcoin halvening, which basically every 4 years, the amount of Bitcoin that gets emitted out to the world halves. And so there's just less of it in the world. And that generally, historically, has made price go up because of supply and demand dynamics. Yeah, there's a bunch of reasons that I personally feel pretty good about where the market is headed. But the thing with crypto is you never know when something's going to happen and everything crashes 50, 60, 70%. It is highly volatile, highly risky, highly unpredictable. And the thing that I think everyone needs to have is that conviction and do your own research, dig into Bitcoin, dig into Ethereum, see if it makes sense, dig into NFTs. And if you can wrap your head around and go, you know what, I actually think this is valuable, put a little bit of money in, put a small percentage of your portfolio, whatever your risk tolerance is and, where you are in life could be higher, could be lower. And again, think of it in a multi-year journey. It's not, most people are not going to make money day trading or swing trading. If you're here for the next 5, 10, 20 years and think this is going to be an important part of our world, which I really, really do, I think it's a reasonable thing to put a bit of money into.
Yeah,
crypto.
I definitely agree with pretty much everything you just said. That's why I appreciate you coming on and helping us demystify a lot of these concepts. So we understand a little bit better what we're potentially investing in. One quote I want to end on which sort of, I guess, wraps up the whole digital asset ownership discussion, is the internet has existed for about 35 years and will continue to exist for as long as humanity does. The incredibly small period of time where you couldn't own your digital items will be seen as a stone age of the internet and will be considered incredibly weird by future generations. I mean, we've just scratched the surface of all of this, in my opinion, but is there anything you'd like to add to anything that we've discussed?
I would say there are a lot of people with a lot of strong opinions when it comes to crypto on both sides. A lot of people that are pro-crypto, a lot of people that are anti-crypto. And what we're kind of seeing at the moment, at least in the US, is that it's somewhat becoming a partisan issue as well, which is quite unfortunate. And my general advice is for everything, but I think it's really important with crypto, is to do your own research, come up with your own opinions. Don't listen to anyone, any single person telling you crypto is good because of this or crypto is bad because of this. Go read a book, go, read 5 books, go do a bit of research. It's just so much better because there is a lot of misconceptions. It's very easy to just believe what your circle believes. If your friends and your family and your coworkers and whatnot they think crypto is a scam, it's very easy to just go with the default there. Or if you're surrounded by people that think it's, everything's going to the moon next week, it's very easy to, overextend yourself and put too much money in. But taking a step back and doing your own research and coming up with your own, read a book, read Mastering Bitcoin and just read the Bitcoin white paper and see if it makes sense and ask questions and Google and just do a bit of research. And if it doesn't make sense to you, that's totally fine. It's not for everyone. To me, it makes a lot of sense. And to me, I have that conviction because I put the time in and doing the research. And I think that everyone should do that and come to their own opinions because there is a lot of misinformation and again, in both directions.
No, great advice. And I will put a link to you've got some great free courses, which I'll provide a link to as well as your blog. But thank you so much for coming on, Zeneca. I really appreciate it.
Thanks so much for having me. Yeah, it's been a great conversation.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram @Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.